What's going on, everyone? Thank you for tuning in. This is Neo. Wanted to share an update on my last video. It looks like a lot of things have happened. I'm looking at Goldbacks right now. Like I said prior, I'm in United Precious Metals Association where I've been dollar cost averaging into Goldbacks for a very long time. I was looking back at my transactions. They're about since 2021. Now, this is a very small drip, so I haven't accumulated a whole lot. I just wanted to double check. I was curious to see it. And my account holding right now is 136. So I got 136 Goldbacks, trickling in $25 a month, and it's fluctuated over the past couple of years. So sometimes it was nothing, sometimes it was a couple of dollars. It's never been over $25 per month, and then there's like a period where I didn't even drip in anything into it for like a year. So I was just looking to see. One Goldback is $5.74. I think the average what I'm paying right now is about $4 and some change. It's not much of a difference. You're saving yourself like 50 cents per Goldback or something like that. So if anyone's interested, you can do that. They go through Alpine Gold Bank or something like that. I can't remember exactly who physically has the Goldbacks, but you can request to have them. I'm going to continue to drip. Again, this is just some kind of like, I don't know, diversification of some assets, some money. I get kind of bored just saving in US dollars and putting it into a savings account. So this is just kind of like an alternative. So I was checking it out to see what I'm saving, and then, you know, what's new in Goldbacks. I think the ones that I got were $1 Nevada Goldbacks last time. I hold about 30 of them. I think I have 30 of them right now on hand in my safe, but you know, with the 136 in the vault, you know, I'm at about 160 of them. So just over 160 of them. So I'm going to continue to drip into it, you know, see where it goes. One day I'll go and I'll go to Nevada sooner or later. And I know a lot of the businesses over there hold them and will actually take them as currency. So that's pretty cool. If anyone's interested, shoot a comment. I did get my Glint pay. I got my card. It came in the mail, so super happy with that. Thank you, Surfer, for having Andy on there and giving us a code so we didn't have to pay the $10 in fee for shipping or whatever. Again, I didn't put a whole lot, $25 in there. I just looked at it the other day. With the fees, as soon as I looked and logged into my account after I downloaded the app, it was about $24 and some change, right? It ate it. And today is just about, you know, $25.50 today. So the prices of gold is increased. I don't think I'll drip anything any more into this account just yet. I think I'm going to hold off, pay down some more debt. This move really killed me. I increased my debt, I think over $2,000 between everything. And you know, so I just got my head in the books. Speaking of the book, I think I read like the first chapter, not even the first chapter. I think I read the first couple of pages out of Psychology of Money. So far, it's on par with the other book that I've kind of shared. I think the dude's name was Ted Oxley. I'm sorry if I butcher that. But he sends you a free book if you're interested, and it's about money managing. And it's pretty much just going through like how you grew up, and that's going to kind of determine what kind of investor you are. So if you're a person who likes to gamble like me, it's because I haven't had a hard time growing up financially. I've had parents who've done well for themselves, a lot better than when they first started. And I think that because I'm first generation, I think my parents struggled a lot more later in life to bust their ass and get educated and get better paying jobs. My dad's, he's retired. He's earning his pension. My mom, the same thing. So growing up, I was never short on cash. So it kind of makes sense that I'm a little bit more of a gambler when it comes to investing. Now, if you are a person who grew up poor, the book pretty much tells you that you're penny pinching. You're very scared of losing any money. And so you're not going to make those kind of plays where you can, triple or quadruple or, 10x your money. You're looking at safe plays like a high yield savings account, 4%, 3%, that's on par with your kind of lifestyle of investing, your style of investing. So, so far the book is good. It talks about, the person who throws money around and the person who actually saves it. Brings up two scenarios where this is real life scenarios. A guy was a janitor. He ended up retiring, and they found out he had like $6 million in the bank because he invested slowly. He lived a modest life. He never got remarried, and then he left it all to charity. And then they have another dude who was Harvard educated, had the best training in economics and politics and all that stuff. He was a professional in Wall Street who accumulated millions and millions of dollars and then lost it all and went bankrupt. And they kind of compare that to because of his lifestyle, he over-leveraged himself. He built this gigantic mansion on par with Mike Tyson's mansion over in Connecticut, 20 bedrooms or something ridiculous. And basically he made all of his millions in the stock market. And then in the 90s, everything tumbled. So it compares the two, long-term. Who's the better investor? The guy who was a janitor, had minimal, experience. There's no way he could compete with that dude. And he turned out to, have more money at the end. So that's kind of interesting. So far out of the book, that's kind of just a short glimpse of it. But if anyone wants to read it, you should definitely check it out. S&P just hit another all-time high yesterday, I believe, 23rd. And, it's at 6,100. The beginning of last year, it was at 4,800. So the S&P is just a monster, and it's proven time and time again why you should be investing your money into the S&P market, because it keeps up with inflation, and it's almost, I wouldn't say a guarantee, but it's a good bet. I think that's why Warren Buffett kind of like had said that plenty of times. Like, if you don't know anything about investing, shoot your money into an S&P ETF fund and you'll do pretty well. So I always get scared. Like I've always told everyone, I always get scared when things hit all-time highs. I'm always pessimistic. It's going to have a pullback. And that's when I kind of put it in my mind that I need to have some cash on hand. So any of the stocks that I chase, like Berkshire Hathaway B is my number one pick. Always, that's the one that I'm looking to buy more of anytime there's a little downturn, which has been on par this last couple of months. I think like 450, 455, it's been pretty much steady for a couple of months. It got up to 480 and it pulled back. I was looking at the Cyclical Investor where I think his buy price was like somewhere down in the 300s, which was nuts. I think having the share price fall over $100 is kind of, you're stretching it. And so I think that anytime is a good time if you personally ask me, Berkshire Hathaway B, anytime is a good time. But if you're looking to kind of jump in, you should be dollar cost averaging now, picking up a share. And I can't remember the channel. Sorry. Stock Talk with David. He just talked about, he had 4 ETFs where he kind of like was trying to figure out, or he was just kind of asking like people what they thought about them. He had VOO, which is VOO. It's a Vanguard ETF fund, tracks the S&P 500. He had the SPLG fund. He had the SPY, which is the OG of OGs of all of them. Has more than a few trillion, I don't know about a trillion, but has several billion in there. And the share price is like 400, 600 some odd dollars. It's like, how many shares can you accumulate in a lifetime at 600 some odd dollars? That's a lot. That SPL, all 4 of them did nearly the identical performance. I think it was like 23%, 24%. Like all of them did the same thing. Which makes sense. They all track the same thing. Now, the only difference is how much money they put in each position. But if you look at it and you're looking at accumulating a lot of shares, obviously the more shares you have, the easier it is to make money. So at a share of $70 compared to a $600, share price, the SPLG was it was there. It was made by State Street. It's one that I personally own for my nephew. He has that, and he's done well. I think he's over $100 in gains so far, and the account's not even 2 years old. So plus the dividends. So I feel like I still dollar cost average and I buy as much as I can for him. Sadly, haven't really been paying attention to his account, but SPLG has been really, really good. I was holding a mutual fund. The only thing I don't like about the mutual funds is that they settle at the end of the day. So if you buy, a certain amount of money in the morning, they'll tell you what you paid for at the end of the day when it settles. So that's the only thing I kind of didn't like. Now the mutual funds are actively managed, so you're paying a little bit of a better, usually a fee, but it's really nothing when when you think about in terms of you don't really see that money get taken out. You know what I mean? When you buy it, it's just included in the price. So you're not like, oh my God, they just took, 20 cents from that share that I bought or whatever that I sent them. So you don't really see it. Now, in a retirement account, a pension account, you'll see that. You'll see how much money they're making off you. For every 10 grand they have little examples. For every 10 grand you put in, this is how much we're going to get. And as the pile of money gets larger and larger throughout the years, they take more and more. So it starts off like it's small, but once you start to accumulate more wealth, that little small price looks, that it's a bigger bite. So just pay attention to that. Hey, Mark Precious Metals, it's at 27. It's been at 27 for the last couple of days. I think it's, it got as high as 46 and it just dropped down to 27. Right now, perfect time to jump in, dollar cost average. Going forward, you're looking at a bottom of 24, 25. So at 27, you're not going to be missing out. And if the run happens again and it hits $40, then, you made 100% return. If that will do it. Bullion sales has been really slow. It looks like I was looking at financials. They're in the red, I think. Yeah, they're all in the red. The last year, they're all just in the red. So, right now is the time to buy because silver and gold is going to continue to rise later throughout our life. The next 5 years, next decade, this share price will be a lot more, and that dividend comes in. I think they paid like $1. It was crazy. I was so mad. I made a bunch of videos about it, about how, we're all stackers and we have no idea that A-Mark Precious Metals is like the gigantic bullion sales. They are the Costco of bullion. So I always stress that to everyone. SLV, $27.91, $28. It got as low as 26 and some change right after Christmas. That could have been a really good time to get in. But there's been times where it's jumped below $26. So, you can dollar cost there. It's kind of high right now at almost $28. But I don't know if you want to start your position. I was looking at Sprott. The 13F filings are going to come out next month. So I'm kind of paying attention to see. So this is for the quarter four. So quarter four of last year, they're about to come out in probably around Valentine's Day. And I wanted to see what they were doing. So Sprott, they have a second hedge fund that did these, a sub-advisor or whatever, but I was interested in what they were buying in Q3. And look at this. They bought 1,700% increase in a position that ranks 134 out of 207 positions. It's called ASM. I was checking them out. It's pretty much a penny stock at $1. It's been trading $1 in the last year. It's up 140%. So if you got in last year at 46 cents, you have, 5,000 shares. You can really make some money. It got as high as $1.48. It's at $1.15 right now. It's kind of high. Right at Christmas time, it was under 90 cents. So that's something that's going to be interesting because long term, over a year, it's increased. So moving the next year, if this is on a run, you'll probably make some money. But that was their biggest play in quarter three. The second one was BTG, which is BT Gold Corp. I was looking at last year's, a year from now's performance, and it was negative 10%. So right now, back in February, it hit $2.34. It's at $2.40 right now. If you're looking at to get into it, looks like it might be a good time to buy in. I ended up buying 25 shares, and I'm going to dollar cost average until I get 100 shares. That if it moves for every dollar increase it does, which is, I mean, in 2020 it hit 7. So if we have another rip like that, for every dollar it increases, I make $100, which is not too bad. And these are very small plays. Again, these are very small of their portfolio, less than 1%. This one's less than 30.36%. The next one was too high. It was at 41 a share. And then this one kind of caught my eye too, an 80% increase in URG, which is this $1.26. These are plays that you can kind of get into. They are high risk, but a pretty decent return. They're going to give you more than your average return if they do hit. It's just a matter of trying to get in at a good price. So it looks like 2 years ago, last year in August, it hit $1. It's at $1.26 right now. Doesn't seem like a bad time to get in right now. Sprott didn't put too much. It ranks 137 out of 207. So there's, several other positions that are less, valuable. They got in Q4 of 2020. It's been 4 years. It hasn't really produced much for them. They got in at $1.17, and it's at $1.26. So I always try to get in under what they got in. Let me see. Where am I? Can't see on this thing. Anyways, I always try to get in, under the price that they got in, so I'm in a better position than they are, and they did all their due diligence and homework. So those are the two things. And then I spread some money across some other ones as well. So Amazon, I have Rivian. It's done a couple $100. ATSG, I ended up selling. It did really well. I got in around $15 and it went up to $22 and I sold. I should have probably stayed. They had a buyout. Twilio has done amazing, I believe. These are not current. These second ones right here. I don't know if you can see that, but they are not current. The prices on theirs. IONQ did amazing and I got out. Man, I never learned. I got so excited. So they got in at 15. I got in at like 7. And then right now it's trading like at 20 or 30 some odd dollars right now. And I got in when it doubled. So I made 100% return. And then I got out just to have it go like another 2x. So that kind of sucks. I did get into this position. Oh, that sucks. I can't let's see if I can move this. Sorry. Cool. Now you can see it. So Rivian, this is the transport air business. This is the IONQ. This is nuclear energy. And then I got into this one, Nautilus, biotech. And then the smart, I got 100 shares. I'm down in both of them, even though that I got them way cheaper than what they did. They got in this position at $10, and then smart, they got in at $12. I think I got in less than $2. And then I'll probably let me see if I can, this is what's cool about this one. I can take out that. I can take out history and I can take out sector. And then that kind of moves it over a little bit. That way you guys can see the share price over here on the side. So outlet, this is like a baby monitor. They paid $118 at the tip of 2021. It's trading at like less than $5 right now. Again, if you guys want to, roll the dice, this is where you kind of make those bit larger returns, I should say. But they're very high risk. So like I said before, I like gambling a little bit. So, and then Sprott, for all you silver stackers, Sprott is the guys to follow. You can see what they rank all day, entered, every day. They got Cameco, I believe it is, number one position that they have in their portfolio. They got in at 28. It's trading like 50 something now. And then UEC, which is also uranium energy corp, they got in at $4 2 years ago, and it's trading, I don't know what it's trading at, but if you're looking at trying to get into the resources, that portfolio is the one to follow. So that's Sprott. That's pretty much it. All I wanted to update. The move has been good. I've been chilling. I've been enjoying my new place with my family. Kind of sucks because I just increased my debt overall. But, we're just going to keep our head down, keep grinding, paying it off little by little. I had some upgrades that I did in my garage now. So that kind of sent me back a couple $100. But moving forward, I'm kind of strict on my spending right now just so I can pay off debt. So anything else, comment down below, like, and I'll see you guys later, man. Happy blessings, happy stacking.